All right, team, we are live. Sorry about the audio issues yesterday. Having a lot of trouble with the Blue Yeti, I'll be honest with you. I know there's a lot of raves online about it being a great USB mic. Struggling with my Yeti. Might have to go in the trashy. I don't know yet. Well, unfortunately, today we were hoping for a great day, but I ran out of green shirts. No! And mortgage bonds didn't like it. Let me turn this off and get a little glare off of there. So bottom line is we lost a lot of ground today in mortgage rates. It was not a good day. We're going to take a look at the chart in a second. I think we may have confirmation, official, I would call this official confirmation. I went back 10 days, and there is a correlation, it appears to be, between the price of oil and what's happening in the bond market. And so it may be the fact that the market's always looking for some sort of leader, some sort of indicator, something that the trigger off of. And I don't know if this is because of all the algorithmic trading and all the stuff that goes on in that regard, and that the computers are really trading, the majority of trades are executed by computers. I don't know if that's the reason for it or not, but you notice like in bull markets, there's always a stock. It might be a Tesla, it might be an Apple, it might be an Amazon, and that the whole market is sort of triggering off of that. It appears that the market's gauge on inflation, which is usually the thing that alters bond prices the most, it appears to be oil at this point. So we're going to take a quick look at that, let you know how that looks. There is some good news here because rates are still ultimately very, very low, and the rates going up, 0.5% or even 0.75% for some people. It doesn't make as big of a difference on the payment as you may think. It's more of a psychological thing. So we're going to see how that psychology plays in. And I've had more people than maybe ever in the past week, including some of my bosses, ask me very recently, what do you think is going to happen in the market? What do you think is going to happen in the market? Okay, so I'm going to give that to you as well. So let's do our thing here. Obviously, Derrick Evans, VA Home Loan Specialist here, NMLS 155010. Let's get that out the way. Say hi if you're watching. You can just check it out, or you can say what's up. I'll give you a shout out back. I am a one-man band here. Okay, so obviously I have other files open that shouldn't be, but whatever. So here we are, and this is mortgage bonds. Quick reminder for people who haven't maybe seen this before. These candlesticks are the pricing. You can see prices have been going down. That looks like it should be good because we're talking about mortgage rates, but remember, when bond prices go down, the rates associated with those bonds go up. And so if I pull this up here, we're just going to look, each one of these candlesticks is 1 day. So this was today, lost 50 basis points. Not fun. Let's get the drawing tool out. And this, by the way, a lot of people have been asking me, hey, how do I get that on my own? Mostly because they're probably sick of hearing me talk about it, and they just want to be able to do it on their own. mbshighway.com is where you can go. It does cost money. You can get a 14-day free trial, see if you like it. I think it's pretty cool. Mostly for mortgage professionals, but if you want to know what's going on in the bond market, I think a lot of realtors should join this as well. So we've got this downtrend, and this downtrend starts up here. This is the actual trend line. A lot of people would redraw this trend line and say, oh, well, the new trend line is this. And you can do that. But I think when you look at macro stuff, you usually want to zoom out as much as possible. So this is probably the trend line. This first one here, that's the one that we're going to be triggering off of. The little erase tool here Barry's got set up for us. This is probably the one that we're looking at. Now, I thought we would get to 102.50 here. Which would be really, really nice. It doesn't look like we're going to because we've had a crossover in the moving averages, which took place right here. Not good. And so that has essentially triggered a major sell signal. And so it's unlikely that we will get all the way up here very quickly. We're going to kind of go sideways, I think, this way and higher. I do think we're still going to trend higher. But we're going to run into some stuff, including this trend line and a moving average and other resistance, in the next 50 to 100 basis points. So why do I think that? Because we went down, we exhausted past this resistance level here, with this support level, I should say, which then became resistance, but then we catapulted higher. So that just shows you that it was overdone. And then we came up to a very simple resistance line here and pulled back. So right now, this is just sort of par for the course. This is what you would expect. The question now is, was this little pullback here part of our uptrend that we're creating, which is what I think is going to happen, or is it a continuation of the downtrend and we're going to continue to head lower? That's what remains to be seen. But as you can see today, down 50 basis points. Not fun, not a good day for mortgage rates. But, hey, listen, we've gained a couple hundred points in 3 days, so giving 50 back is not the end of the world. Let's look at the reality of the situation. People are still getting rates in the twos. I locked a very low credit score, high balance FHA rate today into 3.25. That's not that bad, and we're talking sub 640 credit. So there's still great rates available in the marketplace, but not what we're used to, not these super, super low rates. Well, let's take a look at oil. Of course I don't have it ready. Of course you don't, Derrick. Why would you have it ready? You know you're going to talk about it. No reason to have it ready. Let's make the people wait. So it's going to show unchanged as it already cycled out. But if you look at, it was not unchanged. Oil today was up. Oil today was up a buck or so. Here's the day. Here's the trading day. You can see. Look at the last 5 days. Oil trades on different timelines, so it doesn't exactly show you. But you can see we traded higher today. So this is the end of the day. Boom, from there to where we finished up, we're up, not quite a couple bucks, maybe $1.60, $1.70. So oil trades higher, oil goes up, and mortgage bonds come down. And we've seen, and I've tracked this back, I've confirmed actually 10 days on this in a row. There could be more, I only went back 10 days. So it is definitely appearing that oil is the indicator that the market is looking for inflation, which is really what guides interest rates. And oil has been trending higher, and the expectation is going to continue to trend higher. So if that's the case, and we can now confirm that. Can we confirm that? Can we confirm that? Are you comfortable confirming that? I'm at a point where I'm pretty comfortable confirming that. And that's a big deal to say something like that, but I feel pretty comfortable about it based on what we've seen. So if that's true, then what's the expectation moving forward? What can we expect? Will we get a chance at lower rates? I think we will, but that window may not last long. Rates may drop. If you are considering refinancing, especially, I would have yourself in place to be able to lock and pull the trigger if rates do dip down, because I think, based on what we're seeing here, if they do dip down, it may not last for very long. I may get one more dip, maybe two, maybe none. But I think we'll at least get one. If we get that one more rate dip, that's going to be the opportunity to lock, and then we'll see where things get reestablished as this market consolidates. So my prediction is that we will see higher rates. We will see things simmer down a little bit. But what's the real risk here? What's the real true risk? It might be a 2 for day today. We might do a second video and cover some of the Bitcoin stuff that I have on my chest. I do have someone I want to interview. I have selected that I'll be interviewing soon about Bitcoin, but I may do another video just to let you know where my thoughts are on it. A lot of people are getting into this, and I have a lot of thoughts on it, and it's very logical, and it will make sense to everyone. So my thoughts are that we're going to see higher rates slowly. We're going to slowly see higher rates. It should be relatively healthy. I think the Federal Reserve will make sure that it's healthy. They're going to try to fight it off a little bit, but we're going to see higher rates. We're going to see things calm down a little bit. What's the real risk in this market? The real risk in this market, in my opinion, is all the people who own more than one home. There are a lot of people this cycle in real estate, who instead of selling their home to buy the next one, kept it. Not everyone, obviously, but a lot of people did that. Why? Well, because it was a good investment. If you bought a home in the last 10 years, it's been a good investment. Okay, it's gone up in value. You've been super stoked. And you should be. And the numbers are going to continue to show that. And the data and everything looks great for real estate. And it always does in the long run. But when too many people own too many homes, that can start to become a buildup. That might be the bubble. It might be a second home or investment property bubble that's building, and it's all happening underneath the surface. I think that's the greatest risk. I don't know the numbers on this. I don't know the data. I've asked for it. No one can really seem to help me find where's the data showing how many people own multiple homes. That's the main thing I'm concerned about. If we see a raise in interest rates and we see things kind of slow down, how many people would start to say, all right, I'm ready to cash in now. They haven't sold. They were planning on it in the past couple of years, but they've been waiting for the market to top. How many people have been waiting for the market to top before they sell that other property or move to Texas or whatever? How many of those people are there? That's the thing that we don't know. And the first article that we get in the UT that says, this quarter, San Diego real estate prices finally cool down. And then all that starts to come to fruition. That is the real question. That, I think, is the danger in the market. The sort of, in the past, it was the shadow inventory. Remember, they kept telling us the shadow inventory is coming. The shadow inventory is coming. It never came. The market still got crushed without the shadow inventory. But do we have something like that? Do we have a shadow inventory this time that we're really unaware of? This is the thing that I think could be the biggest danger in the marketplace, and we really have no idea if it's there or not to begin with. So quick recap here. Mortgage rates, we lost some ground today. We lost 50 basis points. Not fun, but it is what it is. You see the 50 down on the 30 or 2%er. It's tough. It's tough to take that. It's a blow on the chin. But remember, we did gain over 200 basis points in 3 days. So losing 50, we're still up 150 or so, in a 4-day window. That's great. If you'd have told me that last Thursday we were going to see the next 4 days, we'd be up that much. Terrific. Sign me up. Sounds amazing. So I think we just have to look at that. We have to continue to zoom out, continue to educate people about the fact that the market is changing. Things are changing. Rates are changing. Things seem to be shifting a little bit. Does that mean that the market's going to crash? Does that mean that you're going to be able to buy houses for 10% less than you can today? Probably not. I don't know, what the catalyst would be for that. I keep trying to look for one. I keep trying to find it, and I still don't really have it. Could it be the shadow inventory? Could it be a spike in oil? Maybe. But those are things that are still just speculative at this point. So I'll keep a close eye on this stuff for you guys. Again, if you want this information on your own, you can get it at mbshighway.com. It is a subscription service. Barry Habib puts this out. It's really, really good stuff. And if you know anyone who wants information on a VA home loan or looking to buy a house using the VA home loan benefit, wants information on refinancing, have them give me a call or text, shoot me an email. Happy to help them. It's my passion to help veterans save money on their home loans. That's what I do all day, every day. Hopefully this information is helpful to you in your search for a home or with your clients if you're in the real estate business. I'm always here to help. Everybody have a great day. Talk to you soon.